Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 8th of October. Now this week the markets have already kicked off with a great deal of volatility in the US dollar, in the Japanese yen and also the Great British pound. And that's on the back of some rather decent moves that we saw in many markets last week as well. So let's go and take a look at some of the markets that we'll keep an eye on in the trading room this week. So the first one here is the US indices. So we're looking at the S&P 500 futures market at the moment, and the S&Ps have already sort of a topic on many traders' sort of tongues at the moment because these markets made new highs recently, and they're in a strong bull trend. The question is really now that the markets have sort of rolled over and they've come off their highs. Is this market now going to come into a deeper pullback, or is this now sort of going to continue for looking for new opportunities long? It's just coming back into those moving averages, which is, here on the weekly chart, which is an area where the bulls normally typically come back in. So I come back down to these lower time frames, and if we start to look at the daily chart, you can see that there are some key structure levels that the market's now coming into. On the daily, we've now got a second higher double top formation here in the markets with divergence here, and that's driven the markets down to these sort of lower levels where we've now sort of tested this sort of 28 sort of 70 area. Now this level has been sort of tested multiple times, and I think this is sort of like a line in the sand for these, or the first line in the sand for these indices. If the market can hold here and hold above and bounce off this sort of level, then I think we're sort of good to see higher prices this week, and that's certainly something that I'm going to be looking for here to see how the market reacts around this sort of decision point. Now if it can't hold this area and we get a break underneath here, then I think that we've got a fairly sort of decent window of opportunity underneath price action, and there looks like not a sort of a great deal of support here until we get down to this sort of 2800 area, here on the weekly chart. If we have a look at this on the 4-hour chart, we can see that the sort of this sort of structure level here, we can see how the market sort of tested this sort of area a number of times now. Even on these lower time frames, the market's already in a strong short trend at this moment in time. So coming up to those sort of key decision areas is going to be the key for the US indices. Now, when we have a look at the sort of US indices, I always like to sort of compare them against their sort of counterparts. If we come and have a look at the NASDAQ, the NASDAQ sort of futures again are looking very, very similar. These markets have already sort of put in a double top again with sort of divergence on the sort of weekly chart. If anything, this NASDAQ is already sort of leading the way. It's a little bit more advanced than the sort of S&Ps there, and this is looking extremely sort of bearish to the short side too, and it's also up against our key sort of level here. It's around 7400. Now this market has already, if I sort of zoom out of this, you can see that this level here has been sort of a very key level that we've used in our trading in the past sort of few weeks. Breaking underneath this level takes us into sort of territory that we haven't sort of seen for a while here, and could lead us down to sort of like 7300 and maybe even sort of 7200 here on the NASDAQ. So I'm keeping a close eye on those sort of key structure levels to help to identify sort of potential turning points or continuations of these index trends. Now the other market, let's come and have a look at the commodities now. Now commodities, my favorite commodity here is oil at the moment. Oil, I'm rather liking this from a fundamental perspective long. There's from the fundamental point of view, there's a lot of commentators saying that this market could see sort of $100 a barrel, certainly before the end of this year. Now that means that we need to see some significant sort of upside to the markets, but at the moment the market's already had a very decent run over the past few weeks, and now we're sort of getting a pullback. So we're just getting a pullback in the context of the trends. If we look at the mid time frames, these have already dipped. These now have already broken the trend structure on these mid time frames, so we need to come and have a look here at the daily chart. So taking a look at the daily, if we just do a simple bit of analysis here and take it, draw our fib study in on the last leg of this trend and marry that up with some support and resistance structures that we can see here on the daily, we can see that there is, possibly back into this sort of like just north of this sort of 70 level, there is certainly key support here. For me, I'm thinking the market might not even get back that far. It's coming back into that sweet spot with the moving averages at this moment in time. So possibly even back into the fib level, 50% fib level, which brings it back into the moving average zone. That's around that sort of 71, 72 area. Underneath that, we've got much stronger support just above that 70 level here too. So, possibly, back into these two key levels is the sort of areas which I'm going to be keeping an eye on for potential turning points in oil. And again, my preference here is to looking for opportunities to the long side. Now, when we come and have a look at currency markets, the one that is of most interest to me at this moment in time, and as I say, a lot of them are looking a little bit sort of stretched, a little bit volatile, but one that I'm quite liking here is euro dollar. And the reason here is that euro dollar has broken a significant sort of structure level. If we have a look at this on the weekly chart, we can see that this sort of like 115 area here has now been broken. It doesn't look like there's much of a trend here on the weekly, but we'll see trends on those sort of lower time frames. The most important thing is below this level, there doesn't look to be an awful lot in the way down towards this sort of 113 level down here. So that's a rather decent size window of opportunity underneath price. If we come down to the sort of daily chart, we see that the daily chart is now starting to put in a structured trend here. It's also broken this sort of structure level that's been very, very significant here on the daily chart. You can see that 115 500 area. We're well clear underneath that now, and in fact, if I mark in that sort of 115 area, which is just around here, you can see that price is now sort of, it's broken underneath it, it's pulled back, it's had the retest, and now it's sort of rolling over again. So again, if this market continues to roll over and breaks the low, then I think that there could be some decent move to the short side. We could be looking for opportunities here on these sort of intraday time frames, such as the 4 hour and lower, where we can sort of get trading opportunities in between these windows of opportunity that we identify in price, and looking for setups to take advantage of those. So there's 3 markets that we're keeping a close eye on in the trading room this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.